Be honest, how many days and nights you're spent on the chart looking for the perfect setup or a perfect pattern, the one that would bring context gain over. Have you found it yet? If not, I want to show you a simple and effective work strategy I have developed over the months of research and study, and I will demonstrate how profit consistently by taking advantage of the dynamic of the price and time of this forex strategy is based on the two fundamental factors, two elements that leave no room for the decreasing price and the time of the main advantage of the scalping strategy. In fact, that you don't have to spend hours in front of the charts to try to find all the various patterns like flags, head and shoulders and so on, and you don't have to jump from one time frame to another looking for the convincing that pattern you identified is really worth trading. And it doesn't matter if you like trading with indicators or your price actions trade, both approach will work with this strategy because you will be analyzing markets based on the objective and non-subjective criteria established with clearly and precisions. If this sounds good, let's dive right into the strategy. First, let's talk about the time component. Forex is the world's largest financial market and it's open 24 hours a day, 5 days a week. However, depending on the where you are in the world, days and times may differ due to the time zone and daylight saving time. Generally, the opening and the closing times of the markets are indicated considering the GMT, meaning the Greenwich Mean Time, and you have to pay attention to the fact that in the various period of the year, each country can have different time zone. These concepts may seem obvious to some, but it's very important regardless of the platform you use to know the exact time shown by your charts compared to the GMT in London. So very important. You should pay close attention to the time displayed on the chart because it's not always the same. At the GMT time, since for the strategy it's essential to know the opening and the closing times of the various forex sessions that makes up the day. If we are misled by the wrong time on the platform, our analysis would be wrong. The trading day consists of the several sessions: the European sessions, the American session, and the Asia sessions, also known as London, New York, and session in Tokyo or Sydney. For those who trade forex and specifically trade intraday, it is therefore essential to know the time at which currency exchange should take place on various markets, and especially the time at which multiple sessions are opened at the same time. I have summarized the start in the end time of the main trading sessions in the London GMT time is in this diagram for this strategy. We are interested in the European session for euros. The session starts at 7 GMT with the opening of the Frankfurt sessions, but the main opportunities starts at 8 GMT with opening of the London sessions, while Tokyo is in the last hour of trading. At this time, a large number of the traders are participating in the market. This results in the larger price movements that than in the Asian sessions, which often also proved to be of great impact on the sentiment for the day. We can therefore say that the opening movements of the London sessions are good starting point to trade in the highly liquid markets, as well as finding the best opportunities with the opening of the European Frankfurt before London an hour later. The movement that guaranteed often created the trend for the day, giving us the opportunity to take advantage at and capture the part of it. The trend of the day generated by the London doesn't always remain that way. At the opening of the New York sessions, the high volume of the trade achieved combined with the publicans of important document data can cause large reversal movements that can also reabsorb the entire movement triggered by the London session. It thus, without saying that even this reversal offer us the opportunity to size another trading opportunity. Now let's talk about the importance of the opening price. Here's what you need to know when scalping and day trading forex. The opening of the European sessions can cause large price movements that often results in the important interweek trends, and the first factors to take into account in order to advantage of these movements is opening price of the European sessions. The opening price is the point from which all daily activities originate. It's very important price levels according to which big trades move from the long visions to short visions and vice versa. We can therefore consider the opening price as the closing points representing the sentiment of the day. Here's the key point of this strategy. Most traders focus on the London Open, but the smart traders know there is another important focus point prior to the London Open is the Frankfurt Open. The opening of the Frankfurt occurs at 7 GMT. In the opening of the London at 8 GMT. During this period there is an increase in volumes, but it's still not enough to generate real trends. Now pay attention, the price distance that informed in this 1 hour interval from 7 GMT to 8 GMT determines the range that goes from opening channels. The opening channels contains the open price of the Frankfurt sessions and the open price of the London sessions. And very important, the opening channel is the area within which you never have to enter the market for the rest of the trading days. There's no man's land. This example shows the opening channels from GMT, the opening of the Frankfurt to 8 GMT, the opening of London. These lines represents the low price and the high price form within this hour. Those determining the opening channels, the high and the low price of the opening channels are two very important levels because they are the first support and first resistance for the trading day. Remember, we don't trade inside the channels. If the price goes above it, creates the imbalance that triggers offwards from the buyers and vice versa. If the price goes below, the strength of the sellers is triggered. If the price is inside the channel, since there is no imbalance between the buyers and the sellers, you cannot know which directions to expect, either long or short. This concept remains valid throughout the trading day during European sessions and even if the first part of the New York sessions, as well as we have seen the opening channels, which has the opening of the European sessions. Within it acts as the neutral price zone between the buyers and the sellers. when price breaks upwards, we will have one country signals, while when it breaks downwards, we will have a short entry signals. Obviously, the entry signal is triggered after 8 GMT, the opening of the London, when the price breaks the channels upwards or the downwards. Here's an example of the one country. We have indefinite the opening channel, and soon after a London opening we had an upward breakout. After London sessions opening, we can see the market trades within the opening channels and then immediately change direction and straight upwards with a strong trend. And here's a short entry. After we drew the opening channel, the market immediately started a strong down trend, intraday trend, a short trade. On trend, the channel would have allowed us to capture a nice profit for a day. Where to place the stop loss, which is mandatory, must be positioned on the opposite side of the opening channel. For a long country, stop loss goes a few pips below the opening channel's lows, and for the short entry, stop loss is placed a few pips above the opening channel height. The stop loss is positioned in the way because once entered in the market in a short trade, for example, and during the sessions the price goes back and breaks the opening channels upwards. Remaining in the trade will no longer be sensible because the sentiment of the big market players, those who move their markets past from the short to long, with the high probability that the trend of the day will change. At this point, it's clear that it no longer makes sense to insist on the remaining in the market where to set take profit levels once you have indefined the channels enter the market. After the breakout of the place your stop loss, you must proceed to identify the future price levels at which you will take profits. To define these levels, the best thing to do is to measure the range of the opening channels and project it from the breakout of the channel's high place for the long trade levels, and from the breakout of the channel's low price for the short trade levels. And you have to do it, must be do it multiple times, just like addition pivot points. You determine the first target by projecting the channels, and then the second target by the projection the channels once again, and once again for the third target for the day. When setting price target, the opening channels is measure of volatility. If the channel is narrow, you have to add multiple price target. If the channel is wide, you have to add just a few. You can close 50 of your positions once the price reach the first target, and then let the trade run until the next target is reached. It's up to you decide which money and risk management you want to use. Now that you know the right ways to determine the take profit levels, it's important to mention that you have to plot them immediately and the chart as soon as the opening channels have been formed. You should know that these price levels that you will add to the chart at the beginning of the sessions, in addition to being the ones on which we will place or take profits, they will also be level of the future support and resistance. You will notice how these levels will be used by instruction during the trading day as the real level of support and resistance. In this chart I have to trade upwards, and downwards levels to take profit, and it's ending how the price reacts when it approaches these levels. It's really unbelievable how to accurate these levels are. The price bonus several times reverse breaks and retest them. So this price target are very important, knowing the support and resistance levels for the day in the advance or right at the beginning of the London session. So your session will be at a great advantage over the market. The great thing about the strategy is that it has prices set rules and you can back test this strategy easily and you can implement other type of the analysis to confirm the breakout. If you are a price actions trader, you can analyze slight highs and the lows and trade breakouts in the directions of the trend during the uptrend. You will have higher highs because buyers push the price higher. Lows are also higher because the buyers keep buying the deep area. During the downtrend, lows the lower and highs are also lower because the sellers sell earlier, and buyers are not as interested. So if you spot an upward trend and you see an upside breakout in the opening channels, that's high probability trade. Don't trend breakout in the opening channels when the price is making lower lows and lower highs is also strong sell signals. So if you prefer confirm from the intentional moving average and perfect from the strategy because the grade of the identify the market direction, as well as if you want to use moving average as the filter, you can apply the 200 EMA and then only look for the trade in the directions of the moving average. In this example, we can see that we had a long side above the opening channels and that during this uptrend price always stayed above the moving average. As always, if you learned something new and found value, you want to follow up a video about these topics, leave us a like to show support, subscribe to channel and hit the bell icon to stay notified when we upload the next video. Until next time.